Okay, what is going on, MegaWhale team? Welcome back to our channel. I hope everyone's having a great day, and I hope everyone's enjoying the market for what it is. And I just want to say first and foremost, guys, this is just a prime example of patience. You really need patience in this market. Do not FOMO in. Have your validation points, stick to them, and trust the process. Our validation point was a break over $42,000 to $45,000 with that daily candle close. We didn't have the daily candle close, we didn't buy. And guess what? It worked out in our favor. We didn't have that close, we didn't enter, and we saw a pretty significant drop. All of a sudden, the chart went from looking very, very strong, very good, to now incredibly bearish again. And it can flip in a click of a finger. It can flip very quickly. It was always important for that reason that you're aware of all possible scenarios, so you can adapt, overcome, and react when necessary, quickly, swiftly, and you don't have to panic and scutter around the place trying to figure out what to do next. So we're going to dive right in today. We're going to take a look at the chart and just reiterate what we think is going to happen and what these points of invalidation are. So obviously the trend today is downwards, so we're going to be looking more at the downward side trend. We're going to talk about the short-term uptrend potential, and obviously reiterating the fact that for us to go into a move upwards to 44K, like we said in the video the other day, we do need that daily close above 42 to 42.5 thousand. That's a very major resistance zone on this chart. Just to point out a few things straight away, we have lost that 100-day moving average again. And we did say if we lose that 100-day moving average again on the daily, it will be a very strong sell signal, and it'd be pretty, I would say, significant in terms of the bearish strength on the chart. We also had a rejection from the bull market support band. We had a rejection from the descending wedge. We had a rejection from the 42 to 42.5K region. And there was a lot of resistance up in that range. There was no doubt about it. We've said many times that range was packed full of resistance, and that's kind of what we saw. We saw a very strong rejection. The question is, what happens now? Well, it's very obvious. I think what happens now is we are underneath the 200-day moving average, underneath the 100-day moving average, underneath the declining wedge, underneath the bull market support band. We're coming up to our minor support line at 40,130. Remember, guys, if we lose the support line, we will see a similar move to what we saw here, which will be a pretty quick drop downwards. All right, I'm expecting the next move to be some sort of move downwards. Again, invalidations above 42 to 42.5K. If we get above this range here, we close a daily candle above that level, like we've said many times, that will propel us upwards to $44,440. All right, it is literally as simple as that. I don't think we need to overcomplicate the market today. I think we can keep it short and sweet and simple, just reiterating our points. We're not going to do a full analysis today. We have a full detailed analysis coming on Monday with Wolves of Crypto. We're going to dive right in, and if you want to find out more information, go watch my other videos. Today's video, just a short, quick update on what we think is going to happen and why. So just to reiterate that again, we've already told you a few times about the bullish case scenario. Now, the bearish case scenario is that we are underneath these major zones of, I would say, interest points. Obviously, our descending trend line, 100-day moving average, 42.5K to 42K, 200-day moving average, and that bull market support band. We have a little minor support around this range, but unlikely to hold if we retest it. And obviously, then if we lose this dotted line again, we're going to draw this dotted line up so you can see it again. If we lose this dotted line, we're going to crash again. Similar to what we saw here, we will crash again, but the next support this time is not quite high. It is a little bit lower. So there's a good chance we come down into this range here, retesting that $37,000 range that we thought we were going to test upon this break, but we didn't. We actually went into a pretty big bull trap by the looks of it, which we said was a possibility, and then we come back down. So that is kind of a scope of the larger time frame, or should I say even the shorter time frame. Let's take a look at the real small time frame now. Let's go to a 4-hour chart. Let's just talk about, the possibility of a reversal here. So let's zoom into even the 1-hour chart. So we are seeing a little bit of consolidation above this support range, and that is obviously a good thing to see. We have some neutral candles printing over here, nothing too particularly significant indicating a reversal. We did have a nice long wick up over here, which, obviously probably had a lot of buy orders, a big sell off, liquidity spike over there. Nothing signifying a reversal on the 1-hour chart. Even if we bring up the indicators, I'm going to assume they're not going to be telling us too much, just because the previous drop was so extreme that these lagging indicators will not have caught up quite yet. So obviously RSI looking decent, it's bottoming out, but we haven't really reached oversold territory for the RSI yet, indicating that we can potentially definitely see this drop below the 30-point level, and into, you know, between 30 to even 20 point level, worst case scenario. MACD isn't telling us too much, besides the fact that we are finding a little bit of support in this range above that $40,000 level. We do have positive buying pressure coming in and our selling pressure decreasing, which is really nice to see. Let's go down to a smaller time frame. All right, we can see a little bit more on the smaller time frame here. We can see we do have that 9 MA cross on the RSI. We do need a break above 30 to signify an entry, a buy signal, and obviously the MACD is converging a little bit over here. So even if, I just wanted to say this, guys, it doesn't really matter what the short term is looking like. I think a lot of people get caught up in the day-to-day moves of Bitcoin. And I know we do videos every single day on Bitcoin and altcoins, but I think you need to zoom out. And if you zoom out, the trend becomes a lot more clear. It becomes more apparent. It becomes more obvious. If we get rid of some of these lines, we can really just show you what we mean. So first and foremost, this is very much an ascending channel. It is a downtrend. It is a bearish pattern. It breaks downward more often than it breaks upwards. It can break upwards, but it's less frequent. All right, so we have to assume the trend continues downwards and out of this channel to the downside. All right, we've already shown you guys our price predictions for this. If you go back and watch, we'll bring it up. I'm just going to show you which video to watch. It would be this one here. All right, this one over here. Bitcoin 34.34 on the RSI warns us a huge crash is coming. Watch this video, it's going to tell you all about our predictions, so the downside and upside. But if we zoom out, we can really see what we need. We trade in ranges. Essentially, the price moves between ranges in a market. We have these market structures and patterns to indicate points of diagonal support and resistance, but essentially the price will range between, you know, your lows, so your demand and your supply. At the moment, we have a major resistance over here. All right, it's very, very obvious, guys. If we want to flip and continue upwards, we need to break major resistances. Simple as that. All right, so why would you be looking to enter a long position here? Or why would you be looking to be very bullish here while we're underneath a major resistance? When you zoom out and you look at it like that, it doesn't make any sense. All right, you're essentially buying here because you expect the price, or you think the price will be above here in a few days. All right, and then when the price gets above there, you think it's going to go higher. There's a lot of speculation, and you're not really basing your decision making off what the data is showing or what the chart is actually showing us. And it's showing us until we get over that level, until we close a daily candle over that level, we're in territory that should be considered bearish. We're in territory that should be considered dangerous. And territory that we shouldn't be taking a lot of risk in. It is simple as that. Vice versa. When we drop below the $40,000 level, that is when we should be exceptionally bearish and expect the price to continue downwards, particularly when we lose this $39,000 level, being that major support at the bottom of this entire range. All right, guys. So until then, remain safe. You know, if you want to take scalps, take scalps. Trade with a small amount of money like we've been preaching this entire time. Small investments until we break 48,000, all right? Until then, remain cautious. Don't have a lot of your money in crypto. Trading is what you should be doing in this time, not accumulating. Accumulation can come when the trend has flipped to bullish, and you can accumulate when we start breaking up here, because then the trend will continue massively amounts more to the upside. You've got a lot of time to make profit. You shouldn't be accumulating when the trend is, I guess, what could you say? The trend is unknown or unsure, or should I say the uptrend is unknown or unsure. We're not entirely sure if this will result in an uptrend. It's more statistically proven that these types of market patterns and the price action we're seeing, taking into consideration the global economic environment, that it will break downwards. All right, guys. So during this range, we're ranging. We're doing nothing more than ranging. Be cautious. Daily close above this level, we got a small little bit of bullish action and signifying a move upwards into this range here. All right, break this range, we go higher. Same thing, we break this range, well then we go higher. We break this range, we go higher. We lose this range, all right, we lose this range, we go lower. It's just swinging between price ranges. We have to really identify those ranges on charts, particularly for Bitcoin, and trade the ranges, all right? Same thing goes, guys. We lose this level, we go bearish mode, all right? We swing down. We lose this level, we crash, all right? So this is where the crash occurs. We lose this level on the daily, we crash. We lose this red line on the daily, we have a swing downwards to the 39. All right, guys, that is a simple explanation of how to trade the current market, a simple explanation of what to expect, and probably the best guide you can go off if you want profits. It can't get easier than that. It can't get more simple than that. There's no need to overcomplicate it. We're not even going to look at the technicals today. We're looking primarily at the market structure, at the supply and demand zones, and horizontal resistances. All right, stay safe, and I'll catch you in the next one.